The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the November 21st, the terrific Thursday, the 1 week before Thanksgiving session of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know that I am absolutely grateful for your presence here. But even more important than that, and that's this. It's during this next 53 minutes that I'm here to serve you. So feel free to pick up that phone. You can't dial in just yet, but you can send me an email. Now, please send that off early, and please put radio show question in that subject heading. That would be great. Easier for me to identify your emails. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with a mixed bag out there. The mix goes like this. The Dow is up about 0.9%, 348 points. 0.2 for the S&P, or 11 points. We're off about 0.2 for the NASDAQ, 32 points. Up 1.25% for the Russell, about a 30-point move there, a little over 1% for the trannies, 186. 0.6 for the semis, 31 points there. Gold's up about $20. Silver's down 11 cents. Light sweet crude up $1.32. Natural gas up 17 cents. 30-year and the 10-year note, 30-year Treasury, 10-year note, they're basically flat right now. Our leaders, dollar-wise, to the upside, into the clubhouse, are Snowflake, up about $42 or 32%. That's up $40, 14%. John Deere, up $30, 7%. Axon Enterprise, $27, 4.5%, and Intuit is up $24, nearly a 4% move there. Our shakers to the downside, led by Coinbase, off $21, 6.7%. TransDigm down to about $11, 0.8%. Eli Lilly off 12. PDD Holdings down $12. MicroStrategy off 12. A lot of 12s out there. So we've got movers and we've got shakers. But let's begin our day. Let's take a look at New York Stock Exchange. That advanced decline oscillator. We are still below its zero threshold level. Still, I take that back. Son of a gun. Well, we poked our head above that zero threshold level. If we close above it today and then tomorrow, tells us the buyers are the ones that are back in control of the general markets. Spot VIX index continues to test, but reject that 50-day exponential moving average. Today, that's printed out at 1778. We close above that. That would then, for the VIX perspective, shift the edge back to the sellers out there right now. That edge goes to the buyers. Anything else out here that I can share with you? I think the answer to that is no at the moment. But let's go switch over to those white background screens, because here we can see really what's been acting as resistance. We'll get over to those charts here momentarily. It'll be the daily time frame for the ESCNQ, the Dow, and the Russell 2000. I'll just simply expand them out so each of us can take a look here. There's your oscillator and change line. That is printed out right now. It's printed at 59.72. Our actual high of the day, 59.7150 out there. Now, there's also, so prices traded in the ES-Mini into a sell zone. Used to be the buy zone, was the bullish structured profile. So you can see you have resistance at 59.54, 59.72, and 59.80. 59.87. You clear 59.87, I mean close above it, then you're off to the top. You're off to its all-time high, back to the 60.53 area out there. We got really the same set of conditions in the NQ, only it's not as simple as the ES Mini. What I mean by that is we're still well below the bottom of that daily profile. We haven't even hit that, but we did hit, in essence, its oscillator and change line. Today's high, 29.05. The oscillator and change line at 29.14 out there. Here you also have what used to be a buy zone. It is now the sell zone. So that sell zone for the NQ is at 29.42 to 21.075. You close above 21.075, you're back up to the 21.340 level out there. As we take a look at the Dow Equity Future contract right now, it is taking on that oscillator and change line. If we can close above it, give me a minute here while we expand this chart out. Pull this back just a tad. If we can close above it, let me just refresh the screen here. Thank you for that. So we are trading above it. We're trading inside its profile. It's never given us a profile change in trend. In other words, the Dow was the strongest of the four equity future contracts. Now, price is trading above that oscillator and change line. That oscillator and change line right now measures, as we speak, at the price point of 43.826. Close above that. What that should do is then get us into that sell zone. So we got a lot of turbulence here in the markets. In the case of the Dow Equity Future contract, that turbulence begins at 44.058, runs all the way to 44.342. Now, that's not the level that price needs to close above to suggest we're headed to the upside. It needs to close above its sell the D point resistance level. And that was established. What's going on with this cursor? Good Lord. That was established at the high on November the 11th out there. That high is at 44.625. That's the ultimate level that price needs to close above inside the Dow Equity Future contract to suggest that we're on our way up towards that $60,000 level out there. And finally, let's take a look at the Russell 2000. That equity future contract, come on. I'm not referring to you. I'm referring to my system. Okay. So now we take a look at the Russell 2000. It's attempting to get back inside its profile. It's been below it for several days. So if we can close above that profile level, let me just, wow, this is really, really strange. Sorry about that, folks. Hope it goes a bit smoother. I know life's happening for me. I would prefer the happening for me to not have a mouse problem, though, until after the show. Right now, that oscillator and change line is printed out at 23.62. If we do close above that today, then that's going to favor that we run up into its sell zone. Its sell zone is between 24.02 and 24.29. So, yeah, things seem kind of bullish here. Of course, we discussed this yesterday. We might as well discuss this as well today out here, and that is what's just simply the seasonal pattern? Well, the seasonal pattern, and each of you know this, that the Santa Claus rally typically forms in the October timeframe out there. But then we have, now we're past that October timeframe, but now we're into that November timeframe. Basically, yesterday, on a historical basis, that means over a 96-year average, yesterday, in essence, was a bottom inside this further Santa Claus rally to the upside. It doesn't matter whether it's a 96-year cycle that we use. It doesn't matter whether it's the election cycle. Even after the election, you can see here we're still in that favorable seasonal time frame for the S&P 500. Well, Stevie, about the Dow, what's the Dow's seasonal time frame? Well, we've got more data for the Dow. We have 127 years there. Let's take a look at it. Here you can see also we're in a favorable time period, October, November, certainly December out here for the Dow. If we put this on a presidential cycle, we put this on the presidential cycle, the remaining part of the year. Here, this is basically saying sideways to higher out there, but nothing is suggesting that we really head a bit lower when we take a look at those seasonal patterns out there. So that's what's going on with regard to the daily equity future contracts. Let's do this here. We've got a couple of requests. TAC, ExxonMobil, soybean oil futures, AMD, GDX, FAST, CMG. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. while this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the stock charts up here for ticker symbol TACK. This is the Capital Series Trust Fairly Tactical Sector out there. No clue what that means out there, but it doesn't really matter. We're agnostic as to the symbol. We're just simply doing a technical analysis of TACK. This is for Mohammed. I overlooked this yesterday. Mohammed, right now we can see that price is trading inside its daily profile. That range is between 28.43 at support, 28.80 at resistance. It says sell zone, so it's really 28.68 to 28.80 out there. Prices trade above its green oscillator and change line. It closed today above 28.47, ought to get us up into that sell zone for its daily time frame. The weekly time frame chart last week confirmed a Rhodes momentum indicator top. However, price right now is trading above 28.44, the green oscillator and change line. That basically provides us with a neutral signal at the moment out there, neutral to bullish, because price is also above the top of its profile. The monthly time frame for TAC negated, or looks like it will negate on Friday. This not tomorrow, but on next Friday. Looks like it'll negate its TD9 count top, and that suggests a further move higher. Now, you've got resistance up towards that $30 level out there. That's its weekly Rhodes momentum indicator top. So that would be a likely target. So to sum this up, you got price that's going to take on, or should take on, the sell zone, 28.68, 28.80. It closed about 28.80. That ought to get us back to the high of last week. Mohammed, thanks so much for waiting an extra day on that. Sorry, my apology for overlooking that yesterday out there. Julie wants to take a look at ExxonMobil. ExxonMobil appears to be forming an A to B equals CD pattern to the upside for its daily time frame. Let's take a look at it. Its swing point appears to be November 13th. That session had 15 million shares. In the first less than 2 hours of trading, we are up with 5 million shares. So we've got the volume, at least at this stage of the game. So that'll give you a 1-to-1 A to B equals CD pattern to the upside, assuming that it closes above the B point of this pattern out there. So that ought to get us back to its highs. I'm just simply going to move that A to B level over to the C point. There we go. And you can see that gets you back into that high from the trading session of October 7th. That high runs anywhere from the low at 124.86 to the high at 126.34. That's where ExxonMobil appears to be headed. That would then obviously bode well, or should bode well, for the energy sector as well. On a weekly time frame, price is trading into its sell zone. So it could get a bit bumpy here. That's between 119.81 and 123.75. And on a monthly time frame chart, prices last month, it formed a Rhodes Momentum Indicator top. Price right now trade above its green oscillator and change line. That provides us with a neutral signal there. So ExxonMobil does look like it's on the move. However, and here's the interesting pattern. The 30-minute time frame chart shows that this completed a TD9 count just as we were coming on the air. Now, if price closes above that level on any 30-minute bar, that level being 122.33, that suggests we continue to move higher. Otherwise, in the short term, you could see a pullback. There's no profile support, so 120.48 would be the downside target. Watch the upside, though, because if you close above that TD9 count, that tells you you're headed higher. So that's what we see, Julie, when we take a look at ExxonMobil. Thanks for taking the time to write in. David wants to take a look at soybean oil futures out here. That's we're looking at the January contract. The January contract shows that yesterday price closed, so it has a TD9 count top. David, that's the first thing on a daily time frame. It has it on the weekly time frame. Let's take a look at the daily chart. TD9 count top. What happens? Price yesterday tests and actually closes below its breakout level, 43.58. That was the first signal. We were likely looking at lower price. Today's that second signal. Now we're at bar number 7. You could get a TD9 count bottom as price approaches its swing lows from October out here, those being in the 41.39 type level. Don't know, but you got to get a lower close tomorrow for sure just to get to bar number 8 of the pattern. If you get that, then 90% of the time, when bar number 8 is the low of the pattern, you'll get a completed TD9 count bottom. The weekly chart says, well, you better give me a TD9 count bottom, otherwise I'm going to head down to 38.74. Price on a weekly basis has got a TD9 count top. We mentioned that. Price formed that TD9 count top at its breakdown level. That's that green horizontal line out there. Now if we close below 42.87 come tomorrow, that's going to suggest lower price out there. Its price target was at 38.74 level. Monthly chart out here, we're trading below profile support, even though it's got a Rhodes Momentum Indicator bottom. 46.42 is a real key level of resistance there. So hope that helped you out with regard to the soybean oil futures contract. David, thanks much for writing in, and have a terrific Thursday. Dude would also like to have a terrific Thursday. Let's go take a look at AMD. We take a look at AMD. What's it doing? It's testing profile support at 135.36. What I don't see out here is any kind of a bottom pattern. I see the A to B equals CD, but what this needs, it needs a bullish reversal candle. And there was one, it wasn't even a gap to the upside. So what you're waiting for here on AMD, dude, I would say is some type of bullish reversal candle to confirm a bottom. Then you'd like to see price close above that oscillator and change line, currently at 139.22, 23, 24 out there, close above that, then could take you up to the 147 or 150 level on a weekly time frame for AMD. TD9 count top price has gotten back close to its breakout level down at 132.11. You were close to that at last week's low. So that's still hanging out there. Monthly time frame, Rhodes Momentum Indicator top. No bottom pattern or signal that I see. So it's really going to be the daily that's going to drive the horses out here. If you close below 135.36, let's just make it the swing point that is testing from back on November 15th, which did volume of 44 million shares. Today you're trading into it with a little bit lighter volume, only 12 million shares, I should say, in the first 2 hours of trading out there. So AMD, I don't have anything really bullish to suggest to you. It does have the A to B equals CD pattern to the downside, needs that bullish reversal candle. Dude, I hope that helped you out there. You also want to take a look at Chipotle. Give me a moment here. I will take a look at Chipotle. CMG is the ticker symbol. Trading out right now at 59.99. That's above a profile resistance, which is at 59.72. A close today above 59.72. And tomorrow, you have a profile change in trend. Ought to get us back to the recent highs out there. The high that you're looking at is from just back on November 13th at 61.27. That's your real resistance nut on your daily time frame. On the weekly time frame, you have a TD9 count pattern. That price is likely going to go target. That's the high from the week of November 1st. If price can close above I was going to say if price closed above that high, but really it's the high from last week. If price can close above that high, which is 61.27, the T9 count top gets negated. It suggests that we continue to move higher. I would say with regard to Chipotle, that would be targeted as high from the week of June 21st out there. On a monthly time frame, excuse me, folks, come down with a bit of a cold here. You know, I told you yesterday I don't like when we get cold weather in Florida. In any event out here, what Chipotle is doing for its monthly time frame, it's about to take on its sell zone. And that sell zone, dude, is between 61.68 and 64.21. Daily says, I want to go target that area. The weekly says, well, I want to at least go take on last week's TD9 count top out there. Sorry for the hacking. I need a hacking button out there. Maybe that's it right now. It's the break. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The consistency you're looking for is closer than you think. One or two adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the second and fourth Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Hector wrote in, wants to take a look at the GDX. His question is, what's the meaning here? You've got the daily GDX. Let's open this chart up here. It's trading into its gap to the downside with lighter volume out there. So the gap he's referring to is the one that took place on November 11th. This gap's down with 45 million shares. You got into it a couple of days ago with 22 million shares. Yesterday, you were into it with 16 million shares. First 2 hours of trading, 8 million. So now you're about 24 million share day out there. So that's not too bad. But what's it mean? Well, it is pulling into that. So it could be an area. It could be an area where buyers would want to go ahead and take some profits, if they missed an opportunity to the downside. Could be. But here's what we know about the GDX. Here's how I would also read it, Hector. We can see that price generated a profile change in trend 4 days ago. And now we have price that's trading above that red oscillator and change line. That's the real key level, or that's a key level for the GDX for its daily time frame. If price were to close below that being 37.55 at the moment, then that would suggest that we head lower to test other areas of support. One could be 37.03. Two others could be between 35.65 and 36.11. But will the GDX head lower if gold is headed higher out there? That's the question we need to answer. We know there's a directional correlation out there. Doesn't necessarily measure the strength of that, but there is a directional correlation. Now, gold is trading the upside right now. The GDX is actually trading the upside versus yesterday's close out there. The weekly time frame shows, Hector, so you've identified, an area of resistance where you had volume to the downside, lighter volume to the upside. And as that's going on in the daily time frame, you have the weekly that is taking on its sell zone. The sell zone is between 38.14 and 38.75. So I would expect, as you've identified here, for things to get really choppy. But if gold is going to continue to rally out there, then I would say that the GDX is likely to do so as well. But let's still pay attention to its technical lines of demarcation, the first one being that 37.55 level on any move lower. No other pattern I see here in bar number 4 to the upside, so there's no real reason other than the resistance zones daily and weekly that we've looked at for the GDX to try to power through out there. So that's about the best I can do for you, Hector and Patty. Hope that helped out. And as always, thanks so much for taking the time to write in. Let's go take a look at FAST. F-A-S-T is the ticker symbol. This for Zip inside the Tiger's Den. Zip has got the 80 calls. The question was, should he stay or should he go? Well, you've got price right now, Zip, that has gotten back inside its daily profile, 81.93. If it closes above that today, you ought to make a move up towards its sell zone between 83.41 and 84.14. The weekly chart completed a TD9 count top last week. That suggests that price should pull back to 77.93. That's not going to happen unless price gets back below the 81.93 level, the bottom of that daily profile. So keep an eye on that. The monthly time frame for FAST does not have any kind of a topping pattern. So longer term, and I do mean longer term, monthly wants to move higher. Weekly wants to move lower. Doesn't mean that it will. And the daily time frame is saying, hey, I want to take one more run up at that sell zone. Again, 83.41 to 84.14. If I were to look at a 30-minute time frame chart, that means we all going to take a look at it. We do have a potential of a TD9 count top, I believe. Let's see here. Oh, what did I do there? Don't tell me I deleted that chart. I've done that. That would be the second time in a row. Okay, so Stevie is going to do this here for us, Zip. We're going to pull up, we're going to create a new chart. It's going to be a new 30-minute chart here, if I can do this relatively quickly. Where is it? Chart. And we're looking at FAST. And we'd like this for a 30-minute time frame. Give me a moment here. Got to get to minute, and I got to put in 30 days. 30 days worth of data would be good. Let's get it set up to the template so we can see all the 30-minute stuff out here. Voila, boom, bang. Now let's go ahead and pull that chart over. It's just populating here. Now let's pull this thing over. Let me make it, try to shrink it just a tad for me before I go ahead and open it up. That wasn't exactly what Stevie was trying for, but we're going to make that work. So here what you can see is that if at 12 noon, price closes above on a 30-minute basis, 82.18, you'll have a TD9 count top. That says what you should expect short-term, 30-minute time frame, fast to pull back. And its price target would be about 81.81. That's its oscillator and change line. A test and rejection of that line, zip, would be a bullish signal for you. So, to summarize, watch today's action. A close above 81.93. Would say go ahead and stay with that trade out there. Week, got to be careful of the weekly chart out there. So the daily is the one that's controlling it at the moment. Hope that helped you out with regard to ticker symbol FAST. Stevie wasn't that fast on that one. Let's try to be a little bit faster with regard to DUOT. It's for Jambalaya inside our Tiger's Den. And yesterday, Jambalaya, this formed a Rhodes Momentum Indicator top. It took price right back to support. That was the top of its daily profile, that support level. And it's really got if it closes above this level again today, so that would be at the 494 level. We're at 495 right now. If we close above 494, you'll have a profile change of trend, but you do have a Rhodes Momentum Indicator top out there. So you would then be neutral. If you close below 494, then you're going to go target 483, which it's already touched this morning, the green oscillator and change line. And then if it were to close below that, 469 would be the number. And if price closed below 469, and that 469, I can't really say what I was going to say until tomorrow when we look at this. But 469, a close below that, this is what I can say to you, Jam, is that DUOT would likely target 383. If we look at the weekly time frame chart, weekly time frame chart appears to have found resistance at a prior swing point, the one from March 29th out there. Volume on that swing was 183,000 shares. So far for the week, we've done 715,000 shares. So you're moving into that swing point with volume. That says that next week or the week after, you should at least test that high once again, 574. Monthly chart is trading above profile resistance out there. What else do we have? Not much. So I would be watching the daily time frame, the top of that profile, 494. Below that, 483, and below that, 469. That's what we see when we take a look at DUOT. Let's go take a look at NNE for Jambalaya as well. NNE is trading out right now at 28 and change out here. It is trading above a prior swing point. That prior swing point had volume out here. That's the day of October 21st, 12 million shares. Today so far, you've done 5 million shares. So you're going to take out that swing point, or should take out that swing point with volume. That suggests to Stevie that price should go target. What should it target? It should go target its prior highs. So on a weekly basis, I'd be looking at the day of July, the week of July 12th, anywhere from 22.14 to $34, or the following bar would be June 28th, up at the 37.51 level. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's finish off nano-nuclear energy out here. As we mentioned, it's trading above a prior swing point from back on the day of October 21st. Should close above that. It's got the volume to do that. Let's take a look at any other patterns that are out here, really. You know, you can easily draw an A to B equals CD pattern, but right now what I would say, Jam, is on a daily time frame, you've got a TD9 count top the price is trading into. That's a swing point from June 25th of 2024, 12 million shares there this week so far, or today. You're up with 5 million shares. So it looks like he really wants to go target that swing point high, 37.51 out there. So that's the price target. You got 37.51. You don't have any, you've got the swing point out here from June 28th, also 37.51. So that's what I see when I take a look at nano-nuclear energy out there. Hope that helped you out. Dunkin' Donuts wants to go take a ride on the Amazon train. AMZN out here. I don't recall what your question was, Dunk, so I'm just simply going to go ahead and review the chart. You got a TD9 count daily top out there. Price right now is taking on it's taking on a sort of a buy zone. It's more of an equally weighted profile as opposed to a bullish or bearish structured. So it's trading below the point of control, the center of that profile, 198.74. I'd say a close below that, Dunk, ought to get us back towards 184.31 to, well, really 193.34 to 194.31. The first 193.34 being the bottom of the profile, 194.31 being its breakout level. The weekly time frame, we're trading back. We're really testing a key area of support, and that's the green oscillator and change line. So where does Amazon close tomorrow? I would say if Amazon closes below 198.07, it increases the odds of a move back to the 191.28 level. Well, you don't have to worry about whether that's going to come to fruition, because right now we're trying to understand whether 193.34 to 194.31 will act as support. I don't know the answer to that question. Monthly time frame. Everything here looks good in that it's trading above profile resistance at a green oscillator and change line. So right now it's going to be all about the daily and then the weekly close out there that I'd be watching for Amazon. But right now the daily is saying lower price. I hope that helped you out, Dunk. Let's say Fletch wants to understand where another rising star, QUBT. Don't even know what that is, but I do know this thing is headed higher, or it appears to be. Why would it be headed higher, Stevie? Look at this month. This has gone from $1.03 to $5. That's a gigantic move, I'd say. No topping pattern, by the way, on the monthly chart, nor is there one on the weekly time frame chart. So they're saying this rocket ship still wants to get towards the moon out there, maybe beyond the moon. Let's take a look at the daily time frame. Let's see what we see out here. You're saying, where is this headed to? So daily time frame, we've got no top really to speak of. You're on wave number 7. That's letter F that you see on my screen. So you need a lower high and then a higher high to be able to trigger wave number 7 out there. So that would be one pattern that you could be looking for to potentially lighten your loafers, if you will. On a monthly time frame, let me open this up, see what we see out here, pull this back even further. So what we see is that price is taking on a trend line. Let's draw this trend line in. I'll get Stevie's tool out here, line tool. So we're taking the swing point high from February of 2018. That's then going to be, in essence, touching the high from December 2020. And when we do that, we can see basically we're trading right into that resistance zone. So your question is, where is it headed? I think we can better answer that question come next Friday. So put that diagonal a line on your chart, Fletch, out there. If we close above that, that would be a bullish outcome. Otherwise, we are trading into a resistance area that could be signaling just a little bit of a timeout. So that's what I see when we take a Quantum Computing Inc. out there. This is basically a fairly illiquid stock. I mean, it trades millions of shares. The average volume is about 2 to 4 million shares. That's when it was about $1.41. That's pretty easy to push around in a market like this. So it does say, I don't know what's behind it. The move out there, is it just the word quantum? I really don't know. But it's trading into a potential resistance zone, and that's probably the most important thing that I can provide to you. You probably knew that anyways. Glenn wants to take a look at Boyle. Boyle is on fire. That's because natural gas is on fire. Natural gas is traded in A to B equals CD pattern to the upside. What we will do here is, Glenn, your question is basically where is Boyle headed to, I would suppose. And I don't know necessarily the answer to that because you really do have to pay attention to what the January first, I don't know what's inside of Boyle. Do you know what's inside of Boyle? Let me see if Stevie can type this in pretty quickly here. Boyle Holdings. I don't think it's going to give us what we need because it's probably driven off of the UNG, and so we have to see what's inside the UNG. But I'm going to give this a quick shot, see if anything pops up here about the fund exposures. It's got the November. No, that's not right. As of yesterday, it's all January 2025. Okay, so it's got the current contract in there, which we will go take a look at. But the current contract's in an A to B equals CD pattern to the upside. Its next price target, and you're not going to see this on the screen. Natural gas would be up at 368. That would be the 1.618 of its A to B equals CD. You can see an A to B equals CD pattern here, but Boyle's not taking its directions from Boyle. It's taking its directions from the underlying instrument, which is the actual futures contract. So as an example, let's put that future contract up here. Let's put up the January contract, 2025. So here you'll be able to visibly see its breakdown level. I think that's where it's headed to. That's also at $3.65. I gave you $3.68 as the 1.618 A to B equals CD pattern. So short of now if there were a bearish reversal candle that we're going to form, Glenn, then that would tell us to prepare for retracement back to support. We don't have that as we speak right now. The daily natural gas contract looks beautiful. The weekly looks beautiful. The monthly is looking really pretty good out here. Next Friday, you could get a completed by the D-point pattern on a monthly time frame for natural gas out there. And so we are headed into winter. I don't know that that's the seasonal seasonal time frame, but let's go find out. When is the best seasonal time frame for natural gas? So let's go find natural gas out here. I know it's here. Why is Stevie not seeing it? It's one of those. There we go. Natural gas. It's one of those things. Honey, would you get me the ketchup out of the refrigerator? You open up the door and you say, I don't see any ketchup. Well, here now we take a look at natural gas. It really only has a favorable seasonal period of March and April. And you can see that November, December are the worst performing months for natural gas on a seasonal basis for a 12-month cycle. But look, I think natural gas is basically bucked the seasonal cycle, but just be aware of it. That's all I'm saying. Just be aware of it. Otherwise, things look pretty good as we speak right now. So keep your eye on that natural gas contract, Glenn. I think that will help you out. In fact, the same thing for InnoVisual wants to take a look at the QQQs out here, which we'll be happy to do. But really, the signals from the Qs are coming from the equity future contract out here. And that's what we've got up on our screen right now. Of course, we know that the daily time frame found resistance at its green oscillator and change line at the bottom of its profile. And that's at the 29.14 level. We'll finish taking a look at the Qs when we come back from this break. And we'll also look at SMCI for Joe. The question there, where to exit.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at the NASDAQ 100 via the equity future contract for InnoVisual inside our Tiger's Den. When we take a look at the daily time frame chart for the Qs, or the NQ out here, we just simply take a look at the trading day, that little down cycle day from back on November 15th. The next day, we had a little bit of a higher low. The following day, we both pressed the low and the high, but we did close higher and above the prior high out there. What we've seen out here now over the last 3 trading sessions, that's including today, is a series of 3 higher lows and 3 higher highs out there with price running into resistance. So where the resistance level is, it's certainly between 29.14 and 21.075. If you look at the 5-hour, the 4-hour, and the 2-hour time frame chart, those are also showing us nice bottoms out there. Not unless those bottoms get taken out, is that going to really signal that we're headed lower? And in those cases, after those Rhodes Momentum Indicator bottoms form, we also see a series of higher lows and higher highs out there. So right now, even though you've got that resistance point out there, and it's real resistance for the NQ, if you were to close above 21.075, that's the level it needs to close above to tell you that the move is anything more than just a counter trend move. But right now, things appear to want to try to push higher, at least back into that resistance level. That's what I see when I take those. If I put up the QQQ chart up here, for example, you would see something very similar to what we looked at. Here in the Qs, they ran into resistance at its oscillator and change line and bottom of its profile, 506.18 to 507.14 out there. Let's finish out the show for Joe, who wants to take a look at SMCI. The question is where to exit. Well, you've got a nice Rhodes Momentum Indicator bottom, wave number 7 bottom, and an island bottom pattern for the daily time frame. We are trading above profile resistance. This looks to Stevie like it wants to head higher. Head higher to where? 3762-ish would be the number I'd be looking at, Joe. That's the weekly oscillator change line. It is acted as resistance. Looks to Stevie like price wants to move there. On a monthly time frame, you might get a buy the D point pattern, and come tomorrow on a weekly basis, looks like you'll get a buy the D point pattern as well. Folks, stay tuned for all the great programming. Have a terrific Thursday. I'll look forward to seeing you around on fantastic Friday. Be safe out there, take care, and best of luck to you.